Hello and welcome to Investing Confidential. There is an old saying on Wall Street that the numbers never lie. Well, that might have been in the past, but today the numbers are a lie. And I'm going to show you why we are becoming like China. Okay, China numbers we're always taken with a grain of salt. And today, folks, I'm telling you, you can't rely on anything. Okay. We're going to go through some of these numbers, some of this data over the last week. I'm going to tell you why you just need to hold back and not trade on any of these numbers, no matter what happens in the market in the first reaction. And I'll show you how you can make money on these numbers. These are fake numbers. I've talked about this before, but it's getting out of control. So let's start with the PPI, the wholesale numbers. They look hot, folks. Bottom line. I mean, they were more than expected. Again, I'm going to go through this again. More than expected. Who's expecting this? Okay, Wall Street guys. Okay, they're a waste of time. But okay, more than expected, which makes sense. But here now, let's look at the raw numbers. Okay, again, at the bottom of the screen, you have September versus August versus July. I don't like to look at month over month. I like to look at the last few months. And it's plain to see, like you just, when something pulls back, something goes back up again. Look at food. Okay, demand. Even energy, which was up huge in August, is up again very strong in September, and we know why. We're seeing we're seeing WTI. We're seeing a breakout of crude oil, and this is continuing. There's no stop to it. Okay, and again, this is wholesale. This is what feeds into manufacturing and the consumer and everything else. So now let's look at CPI. According to the talking heads, this was, as you can see here, worse than expected. Okay, but again, the numbers tell you what actually is really going on. And you can see here, I mean, it's all about expectations, right? This is always about expectations. Well, whose expectations? Again, these are Wall Street expectations. They want the markets to calm down. They want to do more business. They're not doing any business. I'll talk about in a second. So they're always forecasting lower CPI to get people going. And then finally, we had a number this week, retail sales. I mean, folks, this is a joke. They told you it was better than expected. Everyone was bullish. Well, better than expected. The consumer's back. You see all the talking heads on CNBC. This is a consumption economy. The consumer's in great shape. Look, I'm going to show you right now why that's impossible in a few seconds. But look at these retail sales numbers. As you can see here, I mean, these numbers were led by supposedly retail food, healthcare, health and personal care. But look at some key metrics like discretionary spending, furniture sales, electronics, building materials, Home Depot, etc. Even the food numbers are kind of skewed. They don't give you the full numbers. But at the end of the day, I mean, what they're trying to convince you is that sales are very strong. Oh, wow, sales are very strong. Okay, look, according to these numbers, they look very strong. But I'm going to show you why these numbers are complete garbage, absolute garbage. Okay, because when you peel away the onion, you can see what's really going on. And you also have to know what the Fed's looking at, right? So you can't look at this in a vacuum. The Fed looks at wages. The Fed looks at CPI. The Fed looks at PPI with their 2% rolling target of CPI. They'll never get there. But again, this is what the Fed has put a line in the sand for. This is why we're going to continue to have trouble. And they continue to ignore food and energy, which, by the way, is really the only thing that matters. Okay, but they try to ignore it, and it is what it is. But the real problem, as I told you at the beginning, for you and I, is you just can't trust these numbers anymore. Okay, you just can't trust them. I mean, first, let's look at the retail sales numbers, how the methodology. Here you're seeing how they collect the data. Folks, I'm not making this up. They collect data by regular mail, by fax, and telephone. These are three communications items that are now obsolete. Okay, U.S. mail. If you ever dealt with the U.S. Post Office in the last couple of years, it's a nightmare, absolute nightmare. Facsimile. Who has a facsimile? I don't. Nobody has facsimile. And then finally, telephone. Who calls anybody anymore? Very few people, especially the young people. No one calls. And then they say they used 4,800 firms. We have millions, 6, 7, 10 million businesses in this country in retail alone. Millions. And they're contacting 4,800, and based on mail, US mail, faxes, and telephones, they're going to tell you what the state of the consumer is. Okay, this is a joke. This is a joke, folks. And then you want to see even the biggest joke of all. Here we have the economic survey participation numbers. Okay, so here's what's really important. The top line is the census. Why is it so high? Well, because they go door to door knocking. And there's only three numbers here, but this is really for everything. CPI, retail sales, all this nonsense. You have 30, 40% participation, and everything is going down. You used to have 70, 80% participation rates. These things are plummeting down to the 30% level. Once you hit below 50, they're unreliable. And they're going to tell you that this is the state of the consumer. This is our growth of the economy. This is jobs. This is employment. All of this is based on mail, US mail, faxes, and telephone calls. And guess what? What we're seeing today is that these surveys are a complete waste of time. It's worse than China, folks, because at least China knows, we know that China lies, okay? Here we have a complete, utter, the institution has failed. Okay, our government is failing. They can't even get their numbers. They can't even get the response rates. They can't even get the way you gather the data correctly. And we have the greatest technology in the world. All these Silicon Valley morons out there. Where are they? Where are they? Okay, they're too busy, making money in stocks. They don't care. They want everything to be rosy. The US government and Wall Street and everyone else skews everything to the positive. And now when you have these low participation rates, the real manipulation is going on. So folks, we're being fed a lie. Bottom line, these government agencies, the Bureau of Labor Statistics, the Census Bureau, this is a bunch of, by the way, I don't know if you notice, but the amount of people that are actually in Washington in the office is like 30%. These people are all home, and they're dealing with faxes, the US mail, and telephone calls. This is a lie, folks. Okay, and I'm going to show you the data to show you that all of this, that they lied to you. Okay, retail sales. Okay, this is the driver the talking heads talk about. Let's look at some real data. Let's first look at small business optimism. Here we see the numbers are down and they're going lower. Okay, I am telling you these numbers are going to continue to plummet. Okay, remember, right before the pandemic, 2018, we're at a high of small business optimism. And then before the pandemic, we were trending down, and obviously things have, and remember, I keep saying this over and over, small business is the engine of growth for this economy and every economy. They drive employment, they drive everything, spending, everything. Okay, so this is the optimism of small business. No, it's bad, very bad. And then let's look at some interesting data that just recently has been compiled by LinkedIn, by the way, which, by the way, fired a bunch of people. As you can see here, you've got job cuts in mostly tech, but it's tough to see, but it's everywhere, all over the tech sector, and it's not stopping, right? Everyone said, oh, they cut a bunch of people in the year, Facebook, all these guys, Google, but it's not stopping now. No. It's not stopping. Okay, and it's even affecting manufacturing jobs because now we got Rolls-Royce cutting 2,500 jobs around the world. We've got it's leaking into everything: media, manufacturing, and then obviously tech, and then Wall Street is a complete disaster. Despite what the numbers tell you, Wall Street is gone. They have gutted Wall Street. Wall Street has gutted themselves. Okay, they've been cutting the research analysts, traders, bankers. They're cutting them left and right because there's no business. You trade stocks recently? How much do you pay in commissions? Nothing. Guess what? Guess what Wall Street makes on commissions? Nothing. All these IPOs that sparked up, they weren't doing anything. They're all underwater now. Guess what? The IPO market's dying again. These guys are finished, absolutely finished. Well, let's continue. Okay. We talked about, let's look at workers on strike. Okay. People are on strike. They want higher wages. And guess what? When you're on strike and you're not making a salary, guess what you do? You cut back spending. You don't go to the stores. Okay. So as you can see here, this is a dire situation today. A dire situation. We've got more people on strike going back into the 80s. And by the way, it's not stopping. It's just beginning. More people and more people will be going on strike because guess what? They're giving in. Because with inflation as it is, nobody's making a living wage. And I applaud, and I'm a conservative guy, but I applaud these workers going on strike. But it's happening everywhere. It's not slowing down. It's not slowing down. And this is when union membership is down. They're not strong anymore, the unions, theoretically, but the workers are getting what they want in a very low union environment. Incredible. Okay, and let's look at, again, this is all going against the data we've been seeing. Consumer credit. Very difficult to get consumer credit now. It's the market is, it's a tightening environment for consumer credit. You can't get the credit cards. I've been showing you in the past, the amount of consumer credit outstanding is exploded $1 trillion, but you can't get credit cards anymore. The banks are tightening down because delinquencies are going up. At the wrong time, you can't get credit. And then here's the one that debunks all this nonsense this week. Look at visits to retail stores. The numbers don't lie, folks, as I said in the beginning. This is a disaster. And it's getting worse. Much, much worse. This is just the beginning. Okay, and then this all dovetails in what we call consumer sentiment. Okay, I don't know how, again, University of Michigan, more accurate than the government number, but we're declining again. We're going lower. Okay, going lower. And then something that is, not mainstream. You're not going to see this everywhere else. But now we're talking about, as you can see here, people worried about retirement. Do I have enough money to retire? And survey says, boom, people are worried. As worried as they have been in the last 10 years. And by the way, it's going to get worse. This number is going to get worse. So, hey, with all this interesting stuff, you're going to go out and start shopping and shop till you drop. Okay? With all these negative factors really hanging over the consumer, not the bullcrap numbers. This is real stuff. Okay, people are going to go out and shop. You wanted me to believe retail sales numbers? They're lying to you, folks. This is all a lie. So what are you going to do? Okay, as a trader, whenever positive stuff comes out, fade it. Wait for the robots to go one way, you go the other way. But remember, as I told you, inflation is sticky. Interest rates are higher for longer. And when they start coming down on their own, not by the Fed, but on their own, be very careful. Okay, you may get a rally, but this is the beginning. of the end for the US dollar, which is going to be very inflationary. So whatever interest rate movement comes down slightly, it's going to go right back up again. All the cost inflation will keep going higher. Okay. Look at housing. Housing is the engine of growth for every economy. We are in a worse housing slowdown than 2008. I've said this before. No one believes it. You're Chicken Little. No. You want to continue to believe the government. You want to continue to believe Wall Street. Go right ahead. Go right ahead. These are the fools that want to put you in these IPOs, and 2 days later they're trading below IPO price before you have a chance to react. These are the guys where investment banking revenue for Morgan Stanley down 30%. These guys are in trouble. So guess what they're going to do? They're going to manipulate the numbers. Every rally should be sold and prepare because what's ahead is even worse. A weak dollar and interest payments on the government debt exploding, okay, which is going to affect the dollar because we're going to get another downgrade. Okay, you see the chart here on interest payments, the government outlays. It's just, by the way, it's worse than what they're telling you here. Much worse, much worse. So folks, I'm not Chicken Little. I read the data. I read the story, not just the headline. Okay, that's what you have to do as an investor. So as always, with all this data coming out, you're an investor, be careful out there.